Thank you very much. I think that we have an extraordinarily interesting group of people here in this panel. I will not introduce you because it's already done, and I start by asking you some questions. Generally, I'll let you speak. I will limit my participation in this panel to the very minimum, and for warming up, perhaps, I'd like to ask Mr. Frewer, who is Vice President of Nasdaq OMX. Nasdaq OMX, as you all know, one of the very leading marketplaces in the world. Recently associated with the famous debut of Facebook. And what may be interesting for us is your reflection about what do you think of an impact, of a possible impact the Facebook debut might have on the sentiment, investor sentiment in 2012 for this period of this year, which is still remaining, because undoubtedly there were very clear hopes attached to this debut. So many voices, many opinions saying that, well, it may be something which will change the mood on capital markets towards something more positive, something more perhaps even enthusiastic. Sandy, what is your reflection after this event?
Well, I'm here and I'm standing, so personally I consider that a good sign. The fact of the matter is that one has to look at the Facebook situation in context. An IPO is what capital markets are all about. It's when a company comes to a marketplace, and in the first seconds of trading, its price is determined, actually even before the first seconds of trading, the price is determined, and the market determines whether or not it'll accept that price. During that first moment of trading, the IPO was so oversubscribed at the high end of the range at 38 that our systems and some other systems just were overwhelmed by the volume. But the most important thing about the IPO is that the company got the high end of the range. It was oversubscribed, and the capital that was raised by Facebook will be used for many acquisitions and expansions of that company. And so, like many other high-tech companies, like Google, for example, and Apple, they don't always start with a double, a triple, a quadruple, and more. They start off with a solid base, with capital that allows the company to grow, and if the virtues of that company are there, that company will, in fact, become a major player. It'll become an Apple, it'll become a Google, it'll become a Microsoft, etc. I think that one of the issues about this IPO that got lost in all of it is what the function of an IPO is. It's not to make an investor a lot of money on the first seconds of trading. It's about capital formation. That is what an IPO is about. You know, we could have done it better, but you know, that'll straighten itself out. Whatever mistakes were made will not happen again. But I think the market saw an enormous interest in a new idea. And I don't think that will go away. You know, each day you see Apple hitting new highs. You see Google continuing to grow. I watch your market with great interest. You know that I've been here a number of times, pre-IPO. I've watched the extraordinary excitement that's happening in your region and how you have become a regional player. When you look at the statistics of the number of IPOs that come through your exchange, it shows that there is a market for IPOs in exchanges that have liquidity and have folks who will trade that product on an ongoing basis, provide both liquidity for the company in the initial public offering and then down the line. I see the same thing happening in your market in Turkey. I think that what happened with Facebook is an exception rather than the rule, both in terms of its size and its magnitude, and in the publicity that it had. But I don't think it'll have any serious long-term negative, and I think, in fact, it'll prove to be a very long-term positive to the marketplace. The most important thing to remember about IPOs, though, if you look at the pipeline in the United States, which I'm a little more familiar with, there are about 220, 230 companies that are out there. There are only 6 that are in the billion-dollar range, 9 that are currently slated in the 500 million to $1 billion range. A third of them are 100 million or less, and the rest are between, which is about 25%, between 100 and 500 million. That's the bread and butter for the IPO. In fact, the average size of an IPO now is significantly less than what it used to be. And that's where the bread and butter is in terms of IPOs. That's where the future is, and that's what the world economies, the regional, local economies need. They need platforms for smaller companies to get into the marketplace, because 92% of job creation happens after the IPO of a company. And so they're very, very important instruments. So I don't think Facebook is a negative. I think in the long term it's a positive. I think it's aberrational, both in terms of its size and its publicity and all the events.
Yeah, I like very much your expression that being listed or going public is a question of a capital formation. And of course, the whole story has its significant point when a company is has its debut, but definitely it's not the ending point. Still, I would like to deepen this issue by asking whether you think that the Facebook case will have an impact on this global sentiment, at least for businesses where business model is attached or linked to internet, or rather will be sooner or later, maybe sooner than later, forgotten, removed by new episodes.
I think that no one remembers where Google started. They know where it is now. Nobody remembered where Apple started and its course it is now. It's the highest cap company in the world. How many years did it struggle along, bumping along the bottom until it found its newest ideas? So I don't think this has long-term impact. I think that the tech market itself is a very volatile marketplace. And either you have a stomach for it or you don't. The difference between tech companies and most other companies, and a lot of other companies that go public, is that there tends to be a disproportionate amount of companies that go public in the tech space with a hope, an expectation, and a dream, rather than earnings. So that, it is going to be a cyclical marketplace. Most tech companies, when they go public, it's the story that they sell, as opposed to the earnings that they sell. So, I think the market is speaking very, very clearly when it looks at not just Facebook, but the whole rash of recent IPOs in the public space on our markets, and frankly, more to that case on other markets. They have had bumpy roads post-IPO because in today's market, people are looking to the basics. And when I go out, one of my jobs is vice chairman. You demoted me, but that's okay. is that, as vice chairman, I literally circumvent the globe. And part of what I do is talk to entrepreneurs who have companies that want to go public. And I tell them two things. One, try to wait until you have earnings, if you can. And two, when you take a company public, what you have to know is that that's the first day of your new life, because after that IPO, you now are running two companies. The first one is your old business, and the new one is the business of a public company. And that is a separate, almost full-time job, because the level of transparency, the level of regulatory oversight, the need for you to communicate, the new relationship that you're going to have in terms of governance is a whole new experience for a whole lot of founders and a whole lot of folks who have never had the experience of what it requires of you to run a public company. It's really two jobs.